Good day to all. This is our second part about internal control processes. So this is part two. And we begin with another interrelated component of internal control, that is control activities. Control activities are actions supported by policies and procedures. That's why I highlight for procedures because control activities are also known as control procedures. That when carried out properly and in a timely manner, manage or reduce risks. As explained by us exhaustively that internal controls would achieve and would really get into the minimization and mitigation of the impacts or effects of risks in the business or client because we are in the part of the operational auditors here. Next, in terms of controls, we can classify them actually into three ways. We have preventive, we have detective, and corrective. So to summarize, we have to focus more on the preventive and then detective because these controls actually would be focused on being able to spot directly as soon as the risks or let's say the red flags or warnings would be available so that we will be able to counter or respond to such immediately as soon as possible also. Remember that the more that the risks would stay, the more that certain failures or backlogs or bottlenecks or delays, mishaps in the operations of the business or client would be going into the operation stream, then the more the costs there are. This is now on the financial aspect. That's why in terms of controls, we have to be able to really spot them directly so that it would be beneficial, it would be less costly on the part of the client. So this is going to involve anyway more costs, especially with the implementation of preventive and detective controls. However, this is just the short run. In the long run, more savings will be achieved or obtained by the business, as opposed to corrective controls, wherein in the short run, it's going to be really costly, and the more also in the long run if the costs are accumulated. Moving on, so as defined, preventive controls attempt to deter or prevent undesirable events from occurring. This is now a proactive approach wherein we are going to do the PDCA cycle. So for those who are familiar with the Deming cycle, which is PDCA, plan, do, check, act. So it's like the aspect and function or functions of management that we begin with planning before we do the implementation. And there would be the so-called controlling aspect like the checking, and we do now the revisions in terms of the action. So this is being proactive. Then we wait for some situations to happen and before we take any actions and we suffer the consequences later on. So this is proactive versus being reactive, which is now on the corrective controls. Now, examples of these would be separation of duties. We know this. The duties should be separated when they're incompatible and with respect to the four areas or duties. We have the CARE, again, acronym. So that's custody, authorization, recording, and execution. Authorization is mentioned here. We also have adequate documentation so that there will be a basis for us to be able to process. And in terms also of our clients, so that our client would be having the system to properly record their transactions and process them. So that's how, or that's what we should look into in terms of operational audits. Because by the way, again, we are on the part of the auditors. And then physical control over assets. So who has the custody and who has the authorization over the assets that should be safeguarded in the business or of the business. Next, detective controls will detect undesirable acts as soon as they happen. They provide evidence that the loss has occurred but not prevent them. Examples would be the reviews, analysis, the variance, so the difference between the actual and the budgeted or standard, reconciliations, physical inventories or count, and audits. They would actually provide evidence again that certain losses coming from the risk are there, but they do not prevent them. So as we go along the way with the types of controls with preventive, detective, and corrective, the more that they become costly in the short run. All right, then some control activities here. We have approvals, we have authorizations and verifications. So this is preventive with respect to the separation and segregation of incompatible duties. But then for these two, detective as explained, and as well as the other examples here. For controls over information systems, that's going to be the internal controls being applied. That's going to be, or they're going to be both preventive and detective. Now, for approvals, there are several ways to do this to have the approval, but then we can have these particular examples like there should be written policies and procedures. So there are already the guidelines like the manual for the company or manuals for the employees as well as the managers or all of the said people composing the organization. Then limits to authority. So only the authority or power given to certain employees, and then the extent or scope. Then documentation, if certain unusual items are there, they should be like sort of questioning of such or a way of knowing if such is still valid and relevant to the organization, or if certain fraudulent transactions are already happening, would be able to spot them. Then another one is no rubber stamps. What we mean by that, this actually means that if we do rubber stamps or do rubber stamping, we are approving something without thoroughly checking it. That's why the policy for approval is that no rubber stamps, meaning everything and all components should be properly and thoroughly checked. Next, for the signed forms, there should be no blanks, most especially with the critical items or parts or portions. So forms should be properly filled out or signed. Then reconciliation, we know these things, most especially with bank reconciliation, and then home office and branch accounting reconciliation for the reciprocal accounts, and many more. Especially also with the reconciliation of interrelated components of our accounting records, like our general ledger vis-a-vis with the subsidiary ledger or ledgers and the schedules. So by this is again a certain way of detective, because you would be able to check if certain fraudulent transactions or unusual items or fluctuations are there. A critical element of the reconciliation process is to resolve differences, right? Because in reconciliation, you would be able to check if there are differences in two or more records or schedules or statements. However, it is no good to note differences and do nothing about it. This is very good, a good statement. If there are differences, so we would be asking why, what caused the differences or what causes them to occur. So we have to go into over, or we have to look deeper about such as being tantamount or equivalent of the corresponding situation. Differences should be identified, investigated, and explained, and corrective action must be taken then, depending, of course, on the investigation and explanation as identified. Review. So we review our comparisons, or we go over with certain comparisons of at least two items, like the budgeted versus the actual, current versus prior period or periods, the performance indicators. So we're talking here about the profits and losses. And then if certain unexpected results or unusual items, so we do follow up. Especially again, the case of management by exception, wherein if we go below or beyond the relevant range, it should be the managers who should be explaining. So example, for normal cycle of our production, let's say for a month, and then the total number of units to be consumed by raw material A is 100,000 to 200,000. If we go below 100,000 or go beyond 200,000, that's now the case of management by exception, wherein managers should be explaining about such, not the persons handling them. the person sending them, like the staff or the employee or employees, the plural sense of such word or words, would be explaining if within the relevant range. So you have this in your management accounting. Then asset security in terms of safeguarding of assets. So there should be a sense of both physical and logical controls over our assets. If we say physical, so clearly that's tangible way of securing certain assets. Like if we're talking about computers, so there's the door. That's the basic example of physical control. Then we have the key together with that, with the door locks. And then for the logical control, so intangible, we have, let's say, the password for the computer, password to log into your account in the computer, password to your respective, let's say, if we're talking about accounting softwares like SAP or SAP and QuickBooks, so to log into such systems, there are also passwords. And as explained, we have the physical safeguards. Perpetual records are maintained, so continuous and updates of our records should be maintained. Then there should be counts which are periodic, and most especially with the physical aspect of that. Under IAS 2 inventories, we have to conduct at least annually, although we can go beyond or more than 2, but then again, think of cost benefit aspect or principle. Then our count should be compared to the records so that we'd be able to check any differences. So the differences could be a matter of unrecorded items or fraudulent transactions which are done, or fictitious sales, which would explain that why is it that our inventories are still more, but then our sales are also more. So there can be a lot of things that could be the result of such investigation for asset security. All right, segregation of duties, explained already. So no one person or nobody should be handling all of these, or at least 2. So there should be like a sort of certain incompatible tasks, duties, and responsibilities, or TDR, should be separated from each other. And then these critical aspects, of course, are being functioned by separate or certain individuals. But then certain transactions, although could be mixed with other transactions for so long as they are not incompatible or they're compatible with each other. All right, so initiate, and then at the same time would approve, would record, would reconcile, would handle the assets, and review the reports. In that case, goodbye to the success of the company in that sense, and at least 2 sets of eyes. So in this case, there should be like another person who will be supervising and who will be reviewing the work of the other. So this is a sense of that. And also for small businesses, it's just a sort of additional information. Actually, some functions could be merged, but then it is the owner who will be monitoring the jobs of, or the works or outputs of these people. So the owner would be setting in. However, in the sense again of mixing incompatible tasks, duties, and responsibilities, this is only applicable for actually the small businesses, but for large, we really have to separate, especially if we're talking about critical key accounts. Then for information systems, you have the so-called general and application. General, of course, overall, and application would be the specific controls. For the general controls, this would apply to overall, that's why I said, to entire ISS, and applicable to all the applications that reside on the system. So we have the following examples. Like for the security, access, data, and program physical, then software development and program change controls, data center operations, and disaster recovery. So these are the examples. For the application controls, these are now very specific controls over the applications, and they can be classified into input, process, or processing, and output. So the IPO flow. I understand that some books also would be adding one, which is database controls in terms of storage, because information and data or data of the company should be kept somewhere or should be placed somewhere for future purposes. Input controls or data entry would be focused on the accuracy and completeness of certain information before they are recorded in the business. So there would be a sense of checking if there is proper authorization, validation, and if there has been the error notification and correction. For the processing control, so we have complete and accurate also, or completeness and accuracy of the processing of the transactions. So going back, before we are going to process any information or data, there should be a sense of checking its authenticity and completeness and accuracy before placing in the actual process. And in the output, so we now check the outputs areas, the management assertions and representations with respect to our standard outputs and the actual outputs. So there should be a sense of comparison as well. In relation also to input and processing. So it's really possible that our audits, as being focused with the operations, would be comparing if what is our output is actually in relation and is actually passable, or it's actually passing in terms of our standard output, and then we connect that with our inputs. So our inputs, for example, are these. So these would be the expected outputs. And then we'd be able also to go over with the processing or the processes in getting these outputs. Then another interrelated component, the fourth one, is information and communications. So for the information, it should be relevant and reliable. Although the word reliable has been changed already under the revised conceptual framework, wherein reliable now is faithful representation. But anyway, same meaning. Information is both financial and non-financial, that's true. So we also deal with the qualitative information, and we also look into the external and then the internal events. Now, the information should be recorded and communicated to management. So this is like the flow of the information. It could be top down or bottom up. So coming from the management to the subordinates, or the subordinates upwards. But we all know as well that the information could be irregular in the organization. So it could be coming from one area or point of reference to another, or level or department, but then, or unit, we can also say that. However, to simplify the analysis, then we'll just have to think it is linear or one way. Now, for the information communicated again to management and others within the agency who need it, and in a form and within a time frame that enables them to carry out their internal control and operational responsibilities. This is very true. If you can recall the constraint under our IAS 1, we're connecting our discussions anyway with our accounting standards. So IAS 1 about presentation of financial statements, even with overview of accounting and conceptual framework, there is a constraint, or one of the constraints of our financial reporting would be accuracy versus timeliness. So we have to make sure that when we are going to make our information or any report and we communicate such, it should be that it is timely, but of course of quality. And then we have to think that even if our report is 100% accurate, meaning to say perfect or complete, but it is not given as soon as the need arises, or as soon as a certain manager or those again within the agency need such or them, then such information is useless. That's why we have to achieve, or we have to actually achieve balance in terms of timeliness and accuracy. Moving on, internally generated information is critical to achieving the organization's objectives, including information relative to critical success factors. So in organization, especially with the big scale, there are certain like statements or areas by which we can determine that, oh, we are doing good or well. And then it's identified and regularly reported to management. Pertinent information is identified, captured, and distributed to the right people. So meaning corresponding and relevant information in sufficient detail, but not so much to the point that it would be burdensome to those who are reading them, in the form and at the appropriate time. So again, timeliness versus accuracy, to enable them to carry out their duties and responsibilities efficiently and effectively. A highlight to two words. So not only being able to achieve the responsibilities, the duties on task, but also being able to make use of the least amount of resources without sacrificing the quality, of course. There are many ways of communicating as well as the form. So it could be in a form of written or oral, in a form of traditional, or let's say technological or electronic. So we have the policy and procedures manuals. So we also have the management directives, although these actually are in paper form, but they can be sent using the email, so meaning soft copies, and also hard copies, which can be posted on the bulletin boards or boards rather, and then the web pages for the online and internet, as well as internet. So going over policy and procedures manuals, management directives, so a sort of letter discussing about certain instructions in the company, memoranda or memos, then bulletin board notices. For the web pages or the websites, we have the internet. So that's the public domain, and intranet. This is private, so within the business only. Videotaped messages. So certain messages are already recorded or pre-recorded. In fact, we can exchange information now by using certain platform like Messenger. We can record ourselves if we talk about certain instructions. Then email and speeches. So again, combinations of manual or the traditional and the electronic or technological. Then we have written and oral, or both or all. We do not stop like with one form. Then monitoring, this is the last interrelated component. We assess or assessing, this involves assessing the quality of performance over time and ensure that the findings of audits and other reviews are promptly or properly resolved. Okay. Remember, in our activities in the organization, it is but normal that we would be able to get, especially for audit, certain findings. And then as well as not only the audit, but also other reviews. So in that case, if there are certain conditions for improvement or rooms for improvement, especially for an operational audit, which is the focus or which would be the foci. So what will be the ways and how do we actually implement such? So by then we'd be able to evaluate and assess if ever the performances over time in terms of quality, or if ever the quality has improved over time. Right. So there is the so-called ongoing monitoring. It's really ongoing or continuing. So it's a non-stop monitoring because the business evolves and the operations would not stop. It would continue in the long run. So it's going to be a going concern assumption then, or continuity assumption in our basic or underlying accounting assumptions. So in this case, there should be a sense of routine feedback. And then from the feedback, we monitor the performance based on the feedback's findings, and then as implemented in the next planning stage. So we will have to monitor the performance or performances if there are already improvements, and if ever we are still hitting our control objectives. So strategies would be able to hit those items. Then operating reports are integrated, meaning they are incorporated or formed part or reconciled with the financial and budgetary reporting system data and used to manage operations on an ongoing basis. So the reports do not stop from there. They should also be actually implemented, and they are actually integrated or they're actually formed part of the actual now operations, especially for the next planning stage and implementation of such or management function from planning to controlling. For communications coming from external parties, they corroborate internally generated data or indicate problems with internal control. For audit purposes, normally there would be some external parties who will be providing critical and important information to us, just like, for example, the cash in bank balance coming from the banks in the form of bank statement, and we can confirm from such banks about the balance or balances, also with the preparation of the bank reconciliation statement, for example, and the proof of cash for to date or at least to date bank reconciliation. So by then, if we are going to do such reconciliations, so we are actually corroborating, or we are actually comparing, correlating, or simply the word relating the external with the internal. The external would be the bank statements and the confirmation returns vis-a-vis with the existing bank reconciliation statements of our clients. Because remember, guys, when we do audit, supposedly these statements are already available. Our job would be evaluating, checking if the processes or procedures actually have been followed in preparing the bank reconciliation statements. That's just one example. Then data recorded by information and financial statements are periodically compared with physical assets. So records versus the actual, and then any discrepancies or differences are being examined. And we have to explain such as to why. Just like again a while ago with the examples of physical inventory count versus the perpetual inventory system records. Then also there should be separate evaluations, like one department should be also evaluating another or unit versus another unit. Let's say manager versus a manager, or manager versus the employee, or vis-a-vis, if not versus, because if we use the word versus, it's like a competition, but it's not. Then consideration is given to the risk assessment results and the effectiveness of ongoing monitoring when determining the scope and frequency of separate evaluations. Then separate evaluations are actually prompted, meaning they occur because of certain major changes in the company or events, like let's say major changes in the management plans or strategies. That would be dramatic. Major expansion or downsizing, so it's either a plus, a growth of the company, or a minus, that's also dramatic. Or significant changes in operations or processing of financial or budgetary information. Now, these are conducted by personnel with the required skills that may include the agency's external auditor. So as said, it's a may, meaning it's not a requirement that external auditors or operational auditors coming from external auditing firms will be doing such, because internal auditors can do. However, because of certain conflicts of interest, perhaps, in as much as internal auditors should be unbiased and should be impartial with any line functions in the business, but to be able to really depart from such, so we actually are operational auditors coming from external auditing firms and doing the operational audit. So as a possibility, again, on our end as auditors. So again, our focus would be, we are the auditors, and then we have our clients in which the operations should be audited. Then the resolution should also be there, in such as the organization should have a mechanism, a way, a system to ensure the prompt resolution of findings from audits and other reviews. So if there are findings, there are any suggestions and recommendations, alternative courses of action. So there should be a way that our client would be committing itself to really resolve the issues or problems, because normally our audits are there because there are certain problems spotted along the way, or why problems have occurred because of certain issues that we will be able to uncover in our operational audits. Then the organization should take appropriate follow-up actions. It does not stop there, especially also on our end as auditors. When we assist our clients in the implementation or recommendation, it does not stop there with regard to findings and recommendations of audits and other reviews. Then in addition, this is now an additional like sort of discussions, because we're done with the 5 interrelated components of internal control. So we have internal control structures and policies relevant to audit in control environment, control procedures and activities, and then our accounting system. So as part of control procedures. Now for the control environment, we have the following examples. So we have these areas that we can look into. But then we have already discussed actually these, so we can just look into or go over with the example. So control environment is basically the setting of the tone of the top management in the organization. And this is like a way, a system or mechanism of making sure that the internal controls should be really able and would really help the organization in achieving its business objectives. Otherwise, then there would be failures of achieving such, and that is called, or these are called now, the business risks. Then for accounting system, so well, we know these things like chart of accounts, the records, the manuals, and then there is audit trail. So we should be able to really follow, or we should be able to go over with the steps of how transactions are being processed and events are being recorded. Then review. So for the first two, normally this would be the so-called preventive controls. And then transaction review, as said, would be the detective controls. And then, as said, detection, but also prevention. Prevention of unauthorized transactions. And if ever these transactions have been processed, so we'll be able to detect. ADP control, so we input editing and other program control. So this can also be preventive and detective. Actually, at this point in time, it is also very important to highlight that there's like an acronym about the controls. So PDC, preventive, detective, and corrective. Then control procedures or activities, these are the things that we do so that, again, business risk will be avoided. But these are now the specific ones. If environment would be like the overall statements, like the generic statements, procedures now are the actual actions that we perform. So example, in terms of personnel, so we have the job descriptions, training programs, the hiring policies, and the competence of personnel. So recruitment items, policy manuals, then all about the planning and the budgets, monitor long-range goals and plans, correct performance and safeguarding of assets, and then periodic inventories vis-a-vis with the records, perpetual records. All right. This is the end of our discussion of part 2. Hopefully you learned something for today. Thank you very much, and God bless us all.